Welcome to the Leaders Insights podcast. Today's episode, how Walmart proved data ROI to its board, lessons from a $1 billion bet on supply chain intelligence. Walmart just made a $1 billion bet on its supply chain data and somehow got the board to say yes. Most CDOs can't get sign-off for a new dashboard. What did they do differently?
They stopped pitching data as a virtue and started pitching it as a P&L line, profit and loss, the actual money in and money out. The board didn't approve a data platform. They approved a return.
That sounds like a slogan. What's the mechanics underneath it?
The mechanics are the whole story. Walmart tied the spend to inventory it could count. Their reported billion in supply chain intelligence maps to things like reduced out-of-stocks, empty shelves where a product should be, and lower excess inventory sitting in warehouses eating cash. Those are line items a board already understands.
So the trick is translation. But everyone claims their data improves inventory. Why did Walmart's board believe it?
Because they baselined first. Before spending, they measured exactly how much money out of stocks were costing them and how much overstock was tying up. When you have a hard number for the pain, the fix isn't a hope. It's arithmetic. Most companies skip the baseline because it's embarrassing and slow.
Embarrassing how?
Because you have to admit you don't actually know your own numbers. I've sat in rooms where a retailer couldn't tell me their current out-of-stock rate within 10 points. If you can't measure the problem today, you can't prove you fixed it tomorrow. Walmart did the boring part.
Let's be honest though, Walmart has scale nobody else has. Is this even portable to a company that isn't the biggest retailer on earth?
The billion isn't portable. The method absolutely is. 3 things translate. First, pick one process where waste is visible and countable. Second, baseline it in dollars before you spend a cent. Third, agree with finance, before the project, on how you'll attribute the improvement.
Attribution is where these things always fall apart. Sales went up. Was it the data or the good weather?
Exactly. And that's the fight that kills most data programs. Walmart's advantage was picking supply chain, where the causal chain is short. You cut out of stocks, the sale that would have been lost now happens. That's easier to defend than our data lake improved customer sentiment. Pick problems where the line from action to money is nearly straight.
A data lake being the giant pool where you dump all your raw data hoping it's useful later?
Right, and the graveyard of most data budgets. Companies spent the last decade building lakes and then couldn't say what any of it earned. Walmart inverted it. The outcome came first. The infrastructure was justified by the outcome, not the reverse.
You keep praising them. Where's the catch? $1 billion is a lot to bet on arithmetic.
The catch is that you can game a baseline. If you set your before number pessimistically, any improvement looks heroic. A good board asks who validated the baseline and whether finance signed it, not the data team. If the same people who set the target grade the homework, the ROI, return on investment, is fiction.
And when a vendor hands you the ROI figure?
You discount it on site. Every supply chain software vendor has a case study claiming 20-30% inventory reduction. Those are their best customers on their best day, and often modeled, not measured. Walmart's number is credible, partly because it's their own reporting on their own books, not a vendor deck. When the number comes from someone selling you the tool, treat it as marketing until your finance team reproduces it.
So what does a CDO who isn't Walmart actually do Monday morning?
Pick the single most expensive operational waste you can name. Stockouts, late deliveries, whatever bleeds cash visibly. Then go to your CFO this week and get them to co-sign the current cost of that waste in dollars before you propose any solution. That shared baseline is the whole game. If finance owns the before number with you, the after becomes their win too, and boards fund their own wins.
Get finance to sign the problem before you sell the fix. That's the takeaway. Thanks for this. That's it. The CDO decision tools are live at mba-training.com.